What's going on, everybody? This video, as the title says, is going to be about volume bars. Very important to learn, very important to understand, and I think the best, 100% the best indicator you should have on your screen at all times when trading Forex, especially for retail traders. So let's see what it is and how it is that you set it up. Very first, to set it up, all you have to do is go to indicators, press volume, come down, and what I like to put is volume spread for VSA. They have it set up very easy, so you don't have to really move around too much with it, and you can change the colors, do what you want with it, but colors is not really important. What is important is how high these volume bars are during the time you want to enter or exit a trade. Also, please bear with my voice. I know it's kind of annoying, but bear with me. I really want to make this video. I've been putting it off for the past 3 days. So let's try to get into it and see what it is volume bars are really. They are not an actual amount of volume being bought and sold. They are tick bars. They are basically price action. They are bid and ask going up and down, basically being hit. That's what it is. How many times they've been hit during that exact candle that you are looking at. So the hourly during this right here, this 1 hour, this is how many times this was hit. This amount of volume. It's 10,879. You can see it right there. But there is one, grain of salt that you have to take with this. Not every broker has 100% accurate volume bars. Nobody has out there. Whoever tells you they have out there is trying to sell you their brokerage. I like using these open source ones because they combine different brokers into one basic, combination, so it becomes an average amount of ticks. So let's see. Let's look into what it is that makes them so important and why you should always trade with them and why you should enter a trade with them and why you should exit a trade with them. So let's look at, for example, a trade that you could have took that I was calling out before. So first things first, time of day, it will play a big factor into how and why you would enter a trade. Say you were to look back and you were to see a different time. So again, let's look at 3. We can go back to 3 over here and we can see this is significant. So you have Thursday right here, 3, and then you have Thursday right here, 3. Look at the amount of volume right here. Look at the amount of volume right here. Okay, let's look again. Let's mark these off so we can actually start to understand them. Let's look at this right here, and then let's look at it again. Let's look at 3. Where's 3? Right there. Okay, and let's plot another one right here. So let's look at exactly what it is and if it's significant or not. So this is how I would look at it to see if it's significant enough or not for that hourly chart. So we can see 1, 2, 3. I go 2 days behind to see if it's a significant amount of volume during that time, and you can check to see that time right there is not enough significance because of the amount is 28, and then you look over here, it's higher than this, correct, but the second day is 28, so it's right at that level. It's not too high, and I would be very careful because the fact that 2 things on this trade, its level has no significance at all. If it was down here and that amount of volume came in, you'd probably look to see if you can enter a trade for a long position. But because it had no significance, I would not. Let's look at an actual trade so people don't get confused. Let's look at a proper time period, which would be, as I said, around 6 a.m. to around 10 a.m. New York Standard Time. Let's look at the trade. So we would look at it right here, and we've seen something like this right here. This is a significant level. All of this right here is very significant. We already had a break with low volume, and a break to the downside. This volume was high, but nothing too crazy because of the previous volume. Nothing too crazy, so it's still valid. So you could have entered your trade on this candle, or to be more aggressive, on this candle right here, which is 7 a.m. So let's look, but this is not how I enter trades. I'm just telling you how it is that you could have looked at it. So let's look at the time. This is October 13th, 7 a.m. And let's look back to see what it is that we would have seen. October 13th, let's look back. And that's about right here. Let's see this trade as an example. So let's not look at this because you would have never seen this. When you just woke up, you seen your computer and you were going to see if you want to open a trade or not. So you would have came at around, let's say, 6:30 a.m. So you would have been over here. You've seen the market right here. There's no volume. We're at the 14 EMA. That I will put another video of why it's very important, but I'll tell you briefly what you would have took right here. So you come in, you see this, and you see price is very low every time we touch, which is a very good sign for a short. When it touches the 14 EMA, price is decreasing right there. As price comes back down, volume increases, nothing too crazy. You come back up here, and where now you're looking for an opportunity because of this double top. Looking for an opportunity to get into the trade. So you could have possibly took this trade right here because of the fact that it broke. It had a close. It had a close below this previous push. It had the close below it. See it right here, 5-minute close. Always look for the closes. Do not look for when price breaks a certain point. Look for when the candle closes. I take trades on the 5-minute because it is very accurate into seeing when and what price would actually do for the next hour or so. So if you come here and you look, there is what we call over here a no demand zone. Now we have no demand. We can see that this price right here lies at, and we can see. So this candle right here is a no demand because of the fact that the previous bar, you can see the previous two bars are higher than the bar that is in no demand for a short position. So we can look, price reacted to the upside. As we kept on going up, volume is increasing. We have push downs, volume is increasing, push downs. Volume stops right here, stops increasing, and then does not push down. You have one last push with heavy volume kick in. Look at this amount of volume. This is the highest volume that we had in that day. Not the highest on the chart, in that day. You can see right here, look. Why is it so significant? Why is volume so significant? So these bars are very significant because it shows you a lot of retail traders might have said if it breaks this level, thank God it didn't because a lot of retail traders probably would have bought this. If it breaks this level, what they would have did was buy, and it would have retracted and came back down and hit them very heavily if they have a stop loss. So look, you can see right here, we can go back and you can see it is the highest of October 13th. Nothing even came close to it. The most important thing is the reaction. I can't reiterate this. The most important thing is the reaction. Correct, we had a lot of volume come in. Right here, there's not a lot of volume, which is very good. Very, very good. But when it broke this, we had a lot of volume because stop losses got hit. These are all people putting stop losses right here. Stop losses got hit. Once you had that drop right there, you could have said, I would like to see what is going to happen on the next candle after that. What reaction will we get? Will we get a reaction push back up? That means market makers are not done and they would like to get better prices. So they would like the price to be a little bit higher. I'm not saying it's going to go crazy up high, but the price might react to the upside a little bit more because volume kicked it up with a close higher as a bullish candle, which you would call. But price did not, and it reacted with an indecision candle with a lot of volume. You can see right here, and price continued to the downside. You can see this was a very good sell. Again, you can see it right here, and it went down. Let's find another trade. Again, we can find another trade very simply by looking. Let's look right here. You can also look to see if you would like to take this trade long, because where did price slow down and volume start to decrease from? We started to decrease once we reach this right here. All of this price right here that came into a bounce to the upside, there is buying here. So naturally, price is going to react. I wouldn't personally take the trade, but you could take the trade. There's nothing wrong with it because of the fact that you had a reaction with volume right here. So you could have came in, seen this volume after it broke this right here. You can look at it right here. You can draw this out right there. All of that, those candles, 1, 2, 3, 4, 5, 6, and you had this. It's a lot of candles touching this line, so it's a very strong supply zone. We can go to the 5-minute and we can look at it. Let's look at it, see if we had a price to get in. And we did, because of the fact that, look, it broke the low from this push down. It broke the low, had a close, price reacted to the upside though. Look at this volume. This is all stops getting hit, but look at the reaction. Price reacted to the up. Now we need confirmation to get in. So we look, we see, we have a no supply zone right here. We have a no supply zone right there. Now, for me to enter this trade on a risky move, you would have, for me, it would have to hit the 14 EMA, and I would need to see what price is going to do. It hit the 14 EMA, slowed down, price reacted, kept on pushing, and that's confirmation that this is a valid trade to get into. You could have entered this trade around right here with a stop loss right below this, and you could have continued to the upside, and you could have continued all the way to 1912 at least, back to this low from right here. Always price reacts to certain support and resistance levels, but I like to call them supply and demand zones more than support and resistance. Supply and demand. Basically, where's supply going to come in, where's demand going to come in. Also, when taking a trade, I will be explaining in detail more how to take the trade as far as risk management, as far as getting confirmations to enter a trade. This is in general basically about volume and what is the significance behind volume, why you should have it on your chart. Real quickly, I'm going to show you another trade that I called out. This was earlier, right? Where was it? Right here. This right here. This trade right here. You can look back at my history on YouTube, on Telegram, on Instagram, whatever it is, to see that I'm not trying to sell you or anything. I'm just showing you what I looked at and what I see and why it is that I called this out for a short position because of volume. This all had to do with volume. So I want to show you guys something. So you see this right here, this amount of volume kicked in right here to the upside. Look at the volume. Look at the reaction. To me, this is indication that market makers are trying to sell gold. And look at the significance of the level. This level right here, very big significance. After we had a push up, look at the amount of volume right there. It's a pretty high amount of volume compared to the previous amount of volumes that were coming in. This is very significant. The reaction is the most important thing. The reaction came in. Not taking the trade right here until you get more confirmation because of all this uptrade. So we wait. We see this wedge forming. You can see a wedge forming. You know, it's not able to break more high up than it is going down. So now we wait to get confirmation. You get this push right here. Look at this push right here to the highest point on a significant time, which is 8 a.m. Volume kicks in heavily right here, and then what do we do is we come back. This is October 6th. Come back to the 5 minute. And let's look for October 6th. Let's look back, and we are right here. Okay, so let's look back and see what it is exactly we would have seen to take this trade for a short position. As volume increased, it took to the high, and the reaction was to push back down. Volume increased, the reaction is pushed back down, could not break. Then you had the fake break, which I love to call out and tell people be careful of these, because this is what market makers do. They fake breakout, they take out stops, which people would have right here. For example, if they were trying to short, they take them out and then they bring it back because they need liquidity. Very important. Volume is also about liquidity. So look, you can see it right here, pushed up, reaction is down. You come down, still not a confirmation to get in the trade because there is not a no demand candle on the 5 minute. Where you get that no demand is right here. This candle right here is a no demand. Look at the reaction, push down, not a lot of volume at all compared to these, which is a very sign of market makers are done trying to take this higher. Comes back down, price reacts, higher volume. You get a small push up because of that volume, but then that's it. This was the last draw. Market makers are like, we're done pushing this up, and they take it down and it tanks. Look at that. From right here, you would have got in. You can see you would have got in right here, and stop loss very tight right there, and you could have just rode this down. With as volume is increasing, you can see the reactions. You could have got out right here. Very good trade still. It was about a 1 to 1.75 risk reward ratio, or you could have held on to see if it breaks this level right here and got out. It's a small profit, or you could have held it and you could have got to 1873, 1874 all the way, and from that I would call that a very good trade. And I'm out from this. I know it's a long video, and hopefully you guys learned something. Please subscribe so I can keep making these videos and we can all learn together and understand everything more. Comment below if you have any questions. I have no problem answering people's questions at all. Please don't forget to subscribe and like. Peace out.